And encouraging GDP figures for the fourth quarter of last year and in general 3.8% for South Africa. What do you make of these numbers?
Well, what is quite encouraging is that the growth was fairly broad-based. We saw improvements in the majority of the sectors, some moderation in a couple of them, but on the whole, a broad-based improvement, which, although we have to bear in mind, is coming off a fairly low base. The second and third quarter figures last year were impacted particularly by the strikes in the transport sector. So we saw a nice transport figure in the fourth quarter, but that is possibly coming off quite a low base.
Okay, improvements across the board as you're suggesting, but the drivers of growth seem to have been manufacturing and retail, okay, which is encouraging. But the question is, can the South African consumer continue to drive growth, especially when we've got some of these pervasive inflationary risks on the horizon?
Yes, as you say, we've had very strong fourth quarter manufacturing and retail sales figures out recently from Stats SA, but warranting caution on the pace of the consumer recovery is, as you say, the inflationary pressures. Credit extension is fairly muted, while positive, it's muted, and house price growth remains under pressure. You know, that was also something that was quite evident in the GDP release. The construction industry as a whole is still struggling and really is under pressure. So while we expect the consumer to continue to drive the recovery, the risks are there, and I think that we will see a slowdown, particularly in the second half of the year. But hopefully the improved consumer demand that we expect in the first half of the year will filter through into fixed investment growth, which will then hopefully pick up. Yes, it's lagging the consumer, but hopefully it'll start to improve, keeping the recovery on a good path.
Obviously, we've just heard the President speak, and really the whole concept of jobs is the underpinning of that State of the Nation address. Now, we look at improved manufacturing figures, and we know that inventories are up, they're producing, they're selling, but they're not creating jobs. And this presents another dilemma, I think, for the growth figure in South Africa.
Yes, and while we saw, for an example, an improvement in the employment figures out recently, the jobs market seems stable, but it is still very weak. You know, employment is being hampered by, just one factor. An example, it's being hampered by the excessive wage increases we're seeing. So hopefully, with all the focus around employment growth that we've had coming out of government recently, we really are hoping to receive a little bit more detail into it at the budget speech.
Okay, I'm glad you mentioned the budget, because certainly the Minister of Finance must be considering these GDP figures, or probably has been privy to them before they were released today. What is the figure of 4.4% fourth quarter likely to do by way of impacting on that budget speech?
I think, you know, at a high level, it's unlikely to have too much of an impact. The 4.4% quarter-on-quarter print was broadly in line with expectations, so it's not much stronger than anyone expected. So it's unlikely to have too much impact on the budget. I think what the market really will be focusing on the budget are, as we mentioned, potentially some more details on the employment issues, particularly surrounding the new growth path, and also the national health insurance issues, as well as any potential changes to exchange rate policy.
What are we likely to see the markets by way of responding to this? We've seen the markets a little bit subdued in early morning trade, but the growth figures should give some impetus, especially because we've also seen sterling company results.
Yes, I think the markets are holding up quite well, but with the figure not being too far ahead of expectations, it's unlikely to have too much of an impact. I think if we'd seen a figure closer to, say, for example, 5%, that really would have spurred calls for the SARB to start tightening sooner than expected.
What are we likely to see by way of GDP in 2011? I'm not going to ask you to put a number to it, but just in terms of the growth trajectory, is it going to be steady?
Yes, we expect to see quite sound GDP growth for the year as a whole, 3.5% in 2011, picking up to 3.8% in 2012. And as I said, particularly for the first half of the year, that is likely to be driven by the consumer. And then as the consumer recovery moderates, it's not going to contract by any means, but, well, you know, bar the risks that I mentioned earlier. But as that starts to slow down, we should see an improvement in fixed investment spend, which will keep the recovery on track.